Hello, everyone. This is Professor Reiko here again, and we're continuing our chapter on current liabilities and contingencies. All right, so the next thing we're going to focus on in this video is just our employee-related liabilities. And really, what I'm thinking about here is like, in terms of payroll. Every time we pay our employees, there's things that are withheld, things that we have to pay, things that they have to pay that we withhold on their behalf, and so forth. All right, so if you've ever worked and you've gotten your pay stub, the paycheck is always the net amount that goes to your bank is never as much as you want it to be, and that's because there's certain things withheld, mainly taxes. But as you get to start working full time and have insurance and retirement plans and all that, there's even more that are withheld from your check. And what you have to remember is the company you work for is withholding that money, but that money doesn't belong to them. For example, if they're withholding your federal income taxes, well, that money's not theirs. They're withholding it on your behalf and then sending it to the federal government. And then when you get to April 15th on you're filing your tax return, you're really just truing up what's happened during the year. Did you pay too much or did you pay too little based on your deductions and whatnot? All right, so let's just kind of walk through here, right? So, like I said, if you look up here, they withhold a number of things. You have your taxes, insurance, retirement contributions. A lot of times you'll see insurance, retirement contributions, and stuff like that, which are referred to as like fringe benefits. But there's all sorts of liabilities. All right, so some of the main ones. All right, Social Security taxes. Note this is said it's paid by both employer and employee, meaning you, the employee, pays it, and then actually as us, the company, as we're looking at it in this chapter, also pay it. All right, so there's two types. So basically the total is the 7.65%, but there's limits on that. So you have the 6.2 FICA, and that is up to 132.9 annually. Okay, so this is the 2019 number. It typically goes up a little bit each year. So if you're watching this, I'm not going to update the videos every year just for this number, but that's what it is right now. All right, and then we have Medicare, which is 1.45%, and that's on everything. So basically, if you made $150,000, okay, so that last was that 17,100 that you make that gets you over 132.9 would only be taxed at the 1.45%, whereas everything up to 132.9 is taxed at both the 6.2 and 1.45. So make sure you kind of walk through and understand that, because if you, depending on how in depth your teacher goes into it, if they ask a question where you really have to calculate that and you have to figure out how much over 132.9 it relates, you really need to be able to keep that straight. So everything up to 132.9 is 7.65%. Everything over 132.9 is 1.45%. So that might be the easier way to think about it. All right, unemployment taxes. All right, so notice this is paid only by the employer. All right, so this is a little confusing because a lot of times, when there's debates about unemployment taxes, people are like, well, that's our money, we paid it. Actually, the company is paying that on your behalf, okay? So it's 6%. Now, there's all sorts of rules. Every state's a little bit different. They have credits, and some, some it's 5.4, and then there's a 0.6 for the state or the federal, and there's all different types of things. I'm not concerned with that. I doubt your teacher is as well, but it's basically 6% of the first 7,000 paid to each employee. All right, income taxes. This is a big one. So this is your federal and your state income taxes, assuming you're in a state that has it. So I know like states like Florida, Tennessee, Texas don't have state, and there's others, don't have state income taxes, so you wouldn't have that there. All right, so basically your employee is determining how much is withheld based on the W-4 form that the employees filled out. All right, so once again, this is withheld on your behalf from your check, but it is sent to the government. All right, so let's remember, we're in the liability chapter. So all this money is being withheld, but it represents a liability to the company until they pay it to where it belongs. All right, compensated absences, so vacation and sick leave and whatnot. We should accrue a liability if, all right, it's based on services already rendered, meaning past work, relates to rights that vest or accumulate, meaning we get to keep them. The payment is probable, which most people are going to take their vacation or sick leave, and then holidays. You get paid and you don't have to go to work. And the amount can be easily estimated, which usually most companies have a set system by which you accrue your vacation or sick leave. And then bonus is treated as additional compensation. All right, so what I'm going to do down here is I'm just going to kind of sketch out, without using numbers, what our journal entries look like. All right. So I typically refer to this first one. Now keep in mind, I'm calling it the employee entry, but everything's done by the employer. But I just think of the employee one. Think of your pay stub. All right. So up here we'll have a debit to salary and wages expense for some amount. And just think of this as the gross amount, meaning if you make $10 an hour and you worked 1 hour, that should be 10. However, then things are withheld from your check. All right, so you have your federal withholding. Okay, you might have your state withholding. And these are probably all called federal withholding payable, because remember, we're in the liability chapter. So those will all be based on your W-4s that you filled out for federal and state. You would have your Social Security payable. That would be the 6.2%. You would have your Medicare payable. That would be the 1.45%. All right. You might have like insurance payable. So if you work and you pay your insurance through your company, all right, the company is going to withhold your portion of the insurance and send it to whoever the insurance provider, whether it's Blue Cross, Blue Shield, or whatever the case may be. You might have a retirement payable, all right, for your 401k, all right, and things like that. You might have union dues. You might have your parking with, there's all sorts of things that can be withheld your check. But the bottom line here is you're going to end up with salary and wages payable. Okay. This is your check amount. This is your take home. All right. So up here you have the gross amount. That was what your total amount is. Then you have all these things that are withheld from your check. And then this is the net amount that goes to your bank. All right. Now on the employer side, all right, they're going to have payroll tax expense. Payroll tax expense. All right, for some amount. Okay, and it's basically going to be the sum of. So they're going to have the Social Security payable. Let me scroll up here a little bit. All right, Social Security payable. They're going to have the Medicare payable. All right, and it's important to note. So I'm going to circle this and this. All right, these amounts are going to be the same as the two up top. Because remember, both the employer and the employee pay it. So those amounts we're going to match. All right, they're going to have the federal unemployment tax payable. We talked about that. There's probably a state unemployment tax as well. All right, and then the sum of all of these are going to be their payroll taxes. All right, they're also going to have another journal entry where they're going to do, I'm running out of room here, but they're going to have a salary and wage expense. And then they're going to credit all the fringe benefits. All right, so what do I mean by that? I'm going to come up here and mark them. So these are the only two I really mentioned. Insurance payable. So typically your company will pay a portion of your insurance and you pay the rest. So this portion up here is the employee share. And then down here, it would be the employer share of the amount. So say, for example, my retirement pay, I have 5% withheld, and it ends up being, let's just say $100, just to keep the number simple. All right. If my company matches 5%, then down here, they're also going to have a retirement payable for that same $100 because they're matching it. Okay, so you can see there's a lot going on with payroll. There's a lot of areas, especially if you're a small business owner, where you can get into trouble on this if you provide all these things. That's why you'll see a lot of people outsourcing their payroll. But when you go to work, it's very important to realize that, a lot of these things are getting withheld from your paycheck. Understand how that works and make sure you educate yourself on that, especially when it comes to insurance, retirement. If you look up here, this stuff is pretty much out of control. Now you kind of control your federal and state based on your W-4 form, but at the end of the year in April, you're going to have to true everything up. So, but then down here, insurance is determined by what insurance you pick. Retirement depends on how much you're putting away and things like that. Okay, so you can see there's a lot going on. So some teachers will hit this fairly hard. I typically try to think of it in terms of up here is the employee, and then down here, both of these are the employer entries. Now keep on, When I say that, the employer is making all of them. That first one, though, they're making on behalf of the employee, whereas the rest are their share of their liabilities, or what they're going to owe. All right, so hopefully that helps a little bit with payroll. The next one we'll do will be on notes payable. We'll talk about the couple different types of notes, which is another potentially big problem that you could see on your test. So we'll focus it on that next. Hope you're enjoying it. Please hit like and subscribe, and share with your friends. Thanks.